Hi, I'm John, the Guaranteed Retirement Guy. Today we're going to be talking about how much your portfolio should go into annuity contracts. So I sell annuities. I'll just have that disclaimer right there. But I work with over 70 carriers. I show thousands of options, and I think it's important when you're researching this subject that you should have access to everything. And so go to my website, johnstevenson.com. You'll see my calculators. You can go through there and you'll see what's available. So if you feel comfortable at that point, you can reach out to me if you need some help. But in this video, I want to talk about how much your portfolio should be going into this and maybe what shouldn't. So you might have this question, and a lot of people do have this question, and they're always wondering how much is too much. And sometimes they try to put everything in there and they can't, and carriers won't allow it. So let's talk about this. So if you have a portfolio of, let's say, $1 million, okay, the most you could probably ever put into an annuity is maybe 80% of it. Okay, it would be better if it was like 70. So maybe 700 grand, maybe 750, 800,000 if your income and expenses have a good ratio. But usually, if you can do less, then do less, okay? A lot of times advisors will say don't put more than 30 to 50% in. So it just depends on your goals. And sometimes you're not in a position to do that. Sometimes people, that's what they have. They're like, this is what I've got. I need to generate as much income as I can. And I can't afford to do 30%. I need to do like 80%, and that is a fact. And that's just how it works with a lot of us is we don't have, we have what we have. And so I do work with people though, all over the spectrum. Some people have $5-10 million that I work with, and we'll put a decent portion of their portfolio into annuity contracts because they're looking for income and they want that income. I mean, it gets to a point where you're kind of done with earning and you still want growth. There's nothing wrong with that, but you want to enjoy that money, enjoy that income, and maximize the payout to yourself without worrying about it ever running out. And so that's how annuities protect against longevity risk. So I'll share my screen. I'll show you how this works. But I want to kind of talk about this as we go through this and talk about the ratio and what you might want to expect as when you're submitting an application, what the insurance carriers will expect as well. Okay, so looking at my screen, I'm showing someone in Vermont. They've got $800,000, and this represents 30% of their portfolio. Okay, because they got 2.4 million cash. And they're like, we want to keep $800,000 in cash on the sidelines. We want to put $800,000 in the stock market, and we're going to let that grow in the S&P 500, and it's going to double every 7 years, which is great. So then, that's great. I mean, $800,000 doubling every 7 years, that'll double to what, 1.6 million, and then 3.2 million. And that's awesome. Like 14 years, they're going to be well over where they were when they started. And so this allows you to invest still a significant portion of your portfolio into an annuity contract that gives you the income that you want, still have cash on the side, and still have growth. It's the best of all worlds. You just have to position it correctly. All right, so $800,000, this person is 60, they're going to take income at 62. So their income would be close to $70,000. Pretty good. This is contractual, this is guaranteed, and never reduces. So let's say I was to look at National Western. So this one, you can see the annual revenue here, annual income, and guaranteed values right up here. That's important. $69,000 never ends, never goes down. Okay. The account value eventually will go down. That is guaranteed. Just because, you got rider charges here, you've got the withdrawals, and that all affects the account value. Now this income is net. This is a standalone benefit. The fees, the rider charges, come out of the account balance. Okay. You can pick annuities with no fees, but the income is like half of this. So it just depends on what you're looking for. Now, if I go down to growth, it'll probably have some growth. They're giving you some of the index. Okay. They're making money off the S&P 500 because they're buying call options. Okay. And they'll exercise them when the market is good, and when the market's not, they won't. And you make some of that, but it still runs out. Okay. It might last a few more years. Maybe it'll last to 76, 77. But again, that income is why you bought it, and that is guaranteed for the rest of your life. Okay. All right. So again, we're talking about how much of your portfolio should go into annuities. And so this is just using 30%. What if you're like, well, you know what? I'm comfortable with 60% going in because I don't need that much growth. I want to enjoy my money. I don't need to grow this just for nothing. I want to be able to enjoy it. So, all right. And that is very common with a lot of my clients. They want more income. So say $1.6 million. $1.6 million, and maybe they want to leave $200,000 in the bank, and they still want to, invest the rest of it, right? 600,000, right? In the stock market. They can do that. And they're getting more income. That's really nice too. So maybe they're taking, and I'm basing this off of 62. Okay. So they're taking Social Security at 62. Maybe it's 30,000 a year. They got 30,000 a year, and we've got 135,000 roughly, 138. That's pretty good. $165,000 a year. What if they took that and they said, well, we don't need income at 62. We want at 65. Okay. We still want to invest 60% of our portfolio. Okay. Well, then they're just getting more income, right? So because it's deferred. So when it's deferred out, you're getting 176,000. And of course you're getting more Social Security. So now you're well over 200 grand at that point. And that's pretty good. You still got your money growing. And even if you only got 600,000 in the stock market, if that doubles in 7 years, that's 1.2 million. If that doubles again, that's 2.4. You're literally back where you started. Okay. And you have a high amount of income. At that point, you might decide to spend $1 million and buy another stream of income. That is what's so wonderful about these contracts, is they give you that guarantee no matter what happens in the stock market. So anyways, this is important when you're looking at thinking about how much my portfolio should go into this. Yes, you can put up to 80% on some carriers. Some carriers won't take it, but if your income expense ratio is good, then okay. But I always tell people, use the least amount that you need and then let the rest grow, depending on your risk tolerance. But not everyone's like that. Some people are like, no, I want to die with zero and I want to enjoy my money. So if you want to do just the maximum amount, then you can do that. You could do, let's say you do 1.9. 1.9 would be a comfortable range. You still got a $500,000 cash. Okay. That I wouldn't be comfortable putting more than that in that. So if you look at that at age 65, that's going to give you $200,000, well over 200 grand a year for the rest of your life. Okay. If you stuck it in F&G, that will give you, what does that look like? $6.5 million by the time you're 95. If you live longer, you get more. So pretty good. And again, this is different for everyone. Go to my calculators on johnstevenson.com and check for yourself. Okay. Plug in your ages. And if you're married, plug that in as well. And it'll show you exactly what the payouts are. And then if you want to purchase an annuity, you want some help, I'd love to help. There's a link below this video. It goes directly to my calendar. You can go to the link on my website. That goes there as well. And I'll show you everything that's available. Just like this, I'll show you and I'll say, here's what this does. Here's what this does. And we'll kind of play with the numbers. And then if it works out and you feel like, yeah, I'd love to have this, then absolutely, I'd love to help you set it up. So if you got questions, comment below. You can do that too. You don't have to book a call if you don't want to either. So sometimes it's nice to get your questions answered. Sometimes people will email me. That's fine too. But if you like the video, then like, subscribe, share, comment below. Absolutely love to help you if you're looking to purchase an annuity. I hope this video is helpful. I hope you're finding some value from it. Really, the whole goal of my channel, of my videos, is to answer questions and to help people as they kind of move through the process of trying to find the best annuity for themselves without being sold something. Okay. And people don't know what questions to ask. And so I encourage you to go through my video library, because there's so much in there and there's so many questions that are asked, and it'll help you as you try to figure out what to do. So anyways, I hope this helps. I do appreciate you, and we'll see you next time.